Hello, Wednesday's World Economic News, and we'll start with this, which is the United States withholding tax. And I've doctored this chart to show the across the middle is the zero line because it's either increasing or decreasing. And above the orange line it's increasing, and we can see that Bush tax cuts 2003, it ran along the line, but it was the housing that got it up to end of 2006 before it fell down to the end of 2009, and now is on the up and up again. We move on. Clear on money gives us don't try and deduce too much from withholding data. Some are trying to explain the rise in household spending by the resorting to tax withholding data, but one cannot really deduce income changes from withholding changes. I would have thought withholding tax would be a very good indicator of how the economy is going, but he says that basically it's based on the US tax code, and the US tax code is a bitch. Burning platform, America is saved. Consumers borrowing again like drunken sailors. We get a chart. He's used a calculated risk chart showing revolving and non-revolving. Revolving shows it turning down, but there's been a little kick up in the last month of data, and non-revolving has gone up there, you can see. He uses a second chart, which is personal savings in America, and it was down horribly low at below 2% on its way to zero, but it has recently kicked up to almost 5%. So there should be less money in the economy, it should be in the banks being saved. Again, it's tricky data, because is that being defaulted? It's very difficult to nail all this down. But Carl Denninger, as he calls himself, consumer credit, can reporters really read beyond the headlines? And he's talking about this consumer credit. And he quotes, Americans' credit card debt rose for the first time since 2008, a possible sign they are growing more confident about the economy and opening their wallets wider. That was a quote, I think it was CNBC or something. And Carl comes in with, it did? Big question marks. He gives us charts, consumer credit rate of change, and that's, again, you can see the zero line. And on revolving, it's well below the zero line. In other words, it is still contracting, but starting to contract less than it was contracting. And non-revolving is above the line, it is expanding. At the bottom of his article, he gives us, that's my tummy wanting its lunch. Well, there you go. In graphical form, you have material growth in two places. People buying cars, that's non-revolving credit, which is up, and student loans, which now they call non-revolving credit. They've put that all in together, and we know student loans are up big. Neither of which, incidentally, is a good idea. Bullish? You decide. I say not, says Carl. State revenue report from the Rockefeller Institute. I've used this many times. It's wonderful reporting by the Rockefeller Institute. Good information. And I'll pull this one chart out, which gives us state taxes are faring worse than local taxes. But you can see that line is the zero line again. And both are now back above zero. Both taxes, state and local, are increasing. You can see how bad it was for the states, but you know all the tricks they've got up to get more tax in. This is from the same source as the opening chart. It's weekly mutual fund flows. Very interesting. If you look, it's been horribly flat for an awful long time, but the last 3 bars are up. And when I say flat, I mean not up, as in down. Flows have been out of equities. So why has the stock market been going up and up and up since the March lows, 2009 March lows? All these flows have been going out from equities, but the stock market's been going up. And now your money, private flows, mutual fund flows are going in. now, when mysteriously it's been going up for 18 months with none of your money going into it, but you're going in there now. Doug Short gives us a Nikkei and S&P overlap chart from peaks. The peak is obviously the Japanese peak, and it's the .com peak of 2000 or 1999, representing the S&P. You can see that since the S&P has been buoyed by the housing boom and the increase since the March lows from mysterious money going in and now your money going in. Arabian Money .net, I think it is. Goldman Sachs sees nothing worth buying, may start selling. Wall Street titan Goldman Sachs is sitting on $170 billion in cash and can find nothing worth buying in the current markets, reports the Financial Times, adding, if asset prices remain at current levels, Goldman has said it could change gear and begin to sell portfolios. Seldom has a larger red flag ever been raised for investors, for if Goldman cannot find anything worth buying, what chance for the rest of us? But it seems the rest of us, the private money flows, are going in when Goldman is thinking of coming out. Herald Tribune, Japan. Central bank head urges reforms, new growth. Japan still struggling from that huge peak. It has just gone down and down. Tokyo, the head of Japan's central bank, said the country lacks a sense of urgency to tackle the reforms needed to improve government finances that are in very bad shape. The country cannot continue to run deficits forever, Shirakawa said. Therefore, society needs a credible commitment to fiscal reform. They won't get it. They'll just blah blah or blah blah and do nothing. They're on a bus going nowhere. New York Times, after the Great Recession, the Great Regression. Paris, after the Great Recession, Europe has embarked on a Great Regression. Wages, pensions, unemployment insurance, welfare benefits and collective bargaining are under attack in many countries as governments struggle to reduce debts swollen partly by the cost of rescuing banks during the global financial crisis. The European Union, which has long trumpeted a social model with a generous welfare state, partnership between unions and employers, and a working life balance featuring limited working hours and long paid vacations, has lost its swagger, says the New York Times. Yeah, boo-doo-doo to you lot. BBC News, Indonesia's economy grows at fastest rate since 2004. Indonesia's economy grew at its fastest annual rate for 6 years in 2010, driven by consumer spending and investment. Gross domestic product was 6.1% higher in 2010 than in the previous year. Jakarta Globe, Jakarta, Indonesia. Editorial, take our economy from good to great. The country can bask in the latest round of economic figures released by the Central Statistics Agency, which points to a stellar performance last year. The economy expanded by 6.9% in the fourth quarter of 2010, placing it among the top performers in the group of 20 largest economies in the world. Be proud. Taken from the article lower down, such growth levels are important for reducing poverty and raising per capita income. It is estimated that the country's per capita income could exceed $5,000 in the next 3 to 5 years. And therein lies a big story, no? Indonesia pushing in the next 3 to 5 years, working their little bottoms off to get up to $5,000 a year per capita income. where here in France it's probably over 25, and in America over 35, 5 and 7 times more. And we must ask ourselves, why? Why is it like that? And will it stay like that? Will they go up? Will we come down? How will it be? Keep watching World Economic News to find out. See ya. Bye.